Good morning, good afternoon, or good evening, depending where you are on the planet, and welcome to all the Trade Day team to today's Bull versus Bear webinar. Steve Miley here on the Call for Trader. Welcome, everyone. Going to go for a usual regular run through with a slight twist in here for a Monday, where we take a look at bigger picture outlook for the week, see where the potential volatility points come when we're going into the week. So we'll start off by looking at both our macro matters, the bigger, longer version, and the macro summary, the shorter version in here that we publish each day, right below where you're looking right now in the left-hand column, middle column, left-hand column, I can't remember. So you can get those and take a look for those at your leisure in more depth. I'll just do a quick run through in here. So last week, US stock averages consolidated, really a bit of a sideways week around the multi-week highs that we were sitting at, just nudged to new multi-week highs, but closed pretty much unchanged, slightly lower actually. Most of the stock averages on the week, but only by less than a tenth of a percent, less than a couple of tenths of a percent in here, 0.5% most on the Nasdaq, 0.3 on the 0.3 on the Nasdaq, 0.5% on the S&P. So markets kind of marking time up at the recent multi-week highs, and obviously that's changed in here since this morning, but we'll talk about that in a second. US UK trade deal last week managed to be a positive and pushed riskier assets higher. Stock indices pushing higher on the back of that. It wasn't much substance to it, but nevertheless, it was certainly deemed a positive. The Fed had their meeting, no rate cut, no rate changes as expected, and the Fed were very much in wait and see mode in here, wanting to see more data, saying the risks are balanced between increased inflation and potentially a slowdown in the economy. So a balanced risk in the wet Fed very much on hold. US-Sino trade talks kicked off. This was written before we've had some breaking news really in the last 12 hours or so. There seems to be good progress on those, and that's seen markets go significantly higher. But there was even soundings that things were going pretty well over the weekend when we put this together, when we've written all of this, but things are obviously looking a lot better now. Going into this week, US CPI and retail sales data are going to be the main spotlights, alongside Powell's speech and any further trade developments which we're getting at the moment. And if we jump down here, we see the CPI data is on Tuesday. Remember, that's one of our embargo data. So we closed the market 2 minutes before and after the US CPI release. So we have that coming on Tuesday. Nothing really of note in here out today. And then on Thursday, we get US PPI and retail sales, and also Fed's Powell is speaking on Thursday. So those are the main focal points in here. Cisco earnings Wednesday, Walmart on Thursday. We'll take a quick look at the earnings calendar as well as we go through. So that's what we've got in here coming up, and that's kind of the main tail of the tape. One thing to note is with the significant moves we've seen, and we'll talk about those shortly because of the kind of initial details of a trade deal or trade pause anyway, a pause whilst further negotiations are made, and winding back some of those tariffs between the US and China. It seems stocks significantly up. Remember, funded trades not permitted to trade within 2%. So it's only funded trades. If you're on evaluation, you're okay, but funded trades not permitted to trade for 2% of a price limit. And where are the price limits? Well, the first price limit is a 7% move. Okay, so a 7% move. So the first price for 2% within that is 5%. So we're getting kind of closer to that on some of the indices in here this morning, because we're up significantly higher. So please do bear that in mind if you're trading either a funded sim or a funded live account. No trading if you're at the moment within 5%, if the market moves within 5%, so it's within 2% of the circuit breakers price limits, which are at 7%. Okay, so for the first ones. So keep that in mind, please. Data-wise, got basically nothing in here coming out today. Very, 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 very quiet. And as I said previously, Cisco and Walmart Wednesday and Thursday are the two we're going to be really focusing on. So all the on the kind of the overnight news in here, all about investors are loving risk again as trade war cools. So the US and China will temporarily lower tariffs on each other's products in a move to cool trade tensions and give the world's two largest economies 3 months to resolve their differences. Just everyone pushing back into stocks, and gold lower as a safe haven. Dollar surging higher as well, so very positive. And then loads of headlines out: US stock futures and dollar surge and tariff truce. in here. US China slash tariffs is step back from decoupling brink. Oil leads commodity rally after US-China truce as gold retreats. This was like really a hangover from last week, really more than this week. But bond traders rate cuts was flattened by Powell tough talk, and even more less chance now of rate cuts with the potential truce and the potential moving forward on a potential new trade deal between the US and China. So we'll come to the FedWatch tool, and you'll see that shortly. Stocks dollar surge. This is now from Reuters. Stocks dollar surge as US and China agree 90-day tariff relief. US stock futures jump as US-China trade standoff falls. All the same stuff. Gold slides 3%. Slashing reciprocal tariffs. Dollar surges after Sino-US trade truce improves growth outlook. And if we look around the world, Hang Seng obviously significantly higher in here. The Hong Kong stock index echoing the Chinese market up nearly 3% in here this morning. In Europe, not so good in Europe because obviously this is very much more, it's good overall, but it's going to benefit US a lot more, right? So FTSE, UK FTSE is only up 0.3, nearly 0.7 up on the German DAX, and the French CAC up 1.25. But if we look on the overnights in the US futures in here, Nasdaq's already up 4%. So that's why I'm warning, if we see a move of 5%, please, if you're on a funded account, stop trading. 4.1%, 3.6% on the mid cap, and just over 3% on the S&P 500. And here we see on the FedWatch tool in here, really highlighting that shift. So July, we're about sort of, I think, bigger than 50-50. I can tap into the historical actually for the. Actually, let's just go back to the current. So the chances, this is collapsed in here. So the chance, so let's look at the chances of unchanged. This is unchanged for July now, not for June, but out into July. I mean, market now pricing in very little chance of a rate cut in June. And now if we go out to July and we look at the 425 to 450, which is unchanged, and we just go and look at the historicals on these, where we've been 425 to 450 for unchanged. You can see how that's leaked. We were pricing in, only at the end of April, so a week and a bit ago in here, we were pricing in, less than 5% were unchanged. Now we're over 40% chance that we're unchanged in here. And if we go then out to the end of the year, now you'll see the most chance in here is for 50 basis points of cuts. So only 2 rate cuts in here. And the market was 1 point pricing. Only a week or so ago, we were pricing in potentially for 4 rate cuts, certainly for 3 rate cuts. Now we're down to potentially only 2 rate cuts now between now and the end of the year. And if we add all these up in here, so we've got 36.5, 56.5, say. So over 60, so over 60% chance that the most we're going to get is just 2 rate cuts by the end of the year. On the yield side, yields continuing to edge higher as well in here. So that's bond prices down. The bonds selling off a little bit because there's more of as a safe haven. So bonds down in price. Don't need to own bonds, sell bonds, buy stocks. So bonds going down in price, up in yield. And if we go and take a look at our analysis in here, we've been bearish anyway, and we stay even more bearish with this morning's activity. So this was written at the weekend, these articles, and we were bearish and even more bearish now with bond prices going lower. Stock indices obviously significantly higher. I mean, we were bullish anyway. If we go and look at the current market, we're like obviously leapt. There's last week's sideways action in the market, gapping higher. This is on the Nasdaq, massively up in here this morning, taking out resistance points. Same thing on the S&P, gapping higher, massively up. Now we are a long way up. As we said in here, if I just jump all the way back to where are we? Where we're up at the moment, we're up over 4% on the Nasdaq. Now, how much more has this got to go? I mean, I don't mean to say we can't go a little bit higher, but it's probably a lot of the positivity is already priced in. So maybe another percent from here, but then you've got to be looking for potentially this thing to start even as bullish as all this news is, as bullish we were on the technicals going into today. It's a big move already. So just don't get too carried away on the upside, because these things will have limits in how far they can go. Remember those circuit breakers as well, and remember the price limits that we put on you. Trade day 2% within those circuit breakers. All right, guys, I'm going to wrap it up there. I'm going to wish you all a great trading day. Take care, stay safe, and I'll be back with you. We'll be back with you for another Bull versus Bear webinar tomorrow.